Broadcast is now starting. All attendees are in listen-only mode.
Happy Saturday. Good afternoon, my marijuana stock traders. This is Kyle Bazzi, president here at MarketFi.com and Benzinga.com. I am extremely excited to join you on a 4 o'clock Eastern time here on our beautiful Saturday, as everybody else is out celebrating St. Patty's Day, to talk to you about how to start making a killing in cannabis stocks and the market as a whole. Today's presenter is Rod David. Very excited to get him started on MarketFi. But first, I have with me, as I let everybody file into the room, we still got about a few minutes before we start the webinar. I wanted to bring on and introduce, as many of you already obviously know, Mr. Alan Brockstein from the 420 Investor. How's it
Hey,
going, Alan?
Kyle. Great, thanks.
You and I just got off a very long phone call talking about the future of the marijuana stocks and where we're going to be taking a lot of our information and education. And today I think is a pretty cool step on that with, introducing the new product from Rod, the marijuana stock technical trader.
For sure. One of the things that I hear a lot from our subscribers at 420 Investors, that they tend to be novices or not that experienced. Everybody's trying to learn, and that's a great thing. I'm glad that MarketFi is on board with the concept that I agree with, which is that we all need to learn, even the more experienced traders. So this is a great way to start that off.
I could not agree more. For everyone that's filing into the room right now, we had hundreds and hundreds of people sign up for the webinar, so we're gonna have a bunch of people. I want you to check out the questions section or the chat room in your dashboard, and just let us know if you guys can hear us all right. We're going to be bringing Rod on at 4 o'clock. He's going to be sharing his screen. Sarah T just came in. Yeah, you're only getting audio right now, Sarah. The video is going to be coming here in a couple minutes, and Rod's going to be going over an entire presentation. I'll be in the chat room with you guys. My name's Kyle from MarketFi. I will be in the chat room with you to answer all of the questions I can during the presentation. I'm going to hold all of the questions for Rod until the end, and we'll do a little question and answer section. And we also got something special for you guys since Rod is launching his product on MarketFi today, the marijuana stock technical trader. So a lot of cool stuff coming up, and we're going to be talking about how to start making a killing in cannabis stocks. Alan, we got about a minute here before we bring Rod on. Can you just go over a little bit more of how this product why we're starting this with Rod and why this education is needed?
Sure. So, well, first of all, I was going to introduce. Are we recording yet, Kyle, or no?
Yeah, we are.
Okay, good. So I don't want to say this twice. Rod reached out to me. I didn't know Rod until I guess it was sometime in January, and it really resonated. We had a great first conversation. I learned a lot about his background, which I'll share with you in a minute. But the thing that he said was like, "Hey, Alan, have you noticed the charts here? How great they are?" I was like, "Yeah." It's been I've done a lot of charting over the years, and this has been unbelievable to see how these charts set up and play out, and a lot of opportunity, a lot of volatility. Rod and I talked about this. I don't want to take it away from what he's going to tell you, but it all started with this great conversation. My view that we have a large community at 420 Investor that goes from fundamental oriented to technical oriented. A lot of people have told me all they care about is the technicals, and I'm really glad to have somebody else on our platform who can work with people who just want some great chart setups. I think you'll find, for a lot of you, you'll find that Rod's service is just what you're looking for. So I know some of you guys may end up leaving 420 Investor. I hope not, but that's okay. This may be a better product for you, and in the end, MarketFi is all about getting everybody the right products. So Rod and I will be working together to some degree, but he's going to have his approach. I'm going to have my approach. Some of you guys will like both. Rod has been very, very gracious to help out on the education front. He's been doing this for a long time. I think since the mid-90s is when he got started working with individuals in a newsletter format. I'll let him tell you more about that, but I guess that answers your question, Kyle.
Absolutely, and we just dinged the 4 o'clock hour here in Eastern Time Zone. Again, my name is Kyle Bazzi, president here at MarketFi. I'm talking with Alan Brockstein from the 420 Investor. We're really happy to bring a brand new product called the Marijuana Stock Technical Trader to you guys today by Rod David, and that's our presentation: how to start making a killing in cannabis stocks. So, Alan, without any further ado, if you want to introduce Rod and let's get to learning.
Sure. So I don't know exactly what to tell you about Rod, except like I was just saying, he and I both think that there's some great chart setups in this space right now. We're just getting started. There's not a lot of information out there. Obviously, I'm trying to get more information into the market, but lack of information, lots of people coming into the market, new companies, so many opportunities. This is just perfect for technical analysis. Make no mistake, Rod has been doing this for a long time. He really learned how the .com episode played out and was very active in that. I'll let him tell you more about that, but there's a real parallel here between what's going on today with what happened in the late 90s. And a lot of money was made then. A lot of money is going to be made now. Obviously, you guys know that already. It's being made. But I think Rod's going to be a great leader in terms of developing some strategies. And with that, I'm going to turn it over to Rod and sit back and listen. Thanks, Rod.
Hey, thanks, Alan. Appreciate it. Let me just make sure. Is everybody able to see the screen, how to start making a killing, etc.?
Looking great, Rod.
I think great. Okay, good, good. So thank you for the introductions. I did say to Alan how great the charts are, and I didn't mean, look, they go straight up, but how easily discernible for at least my methodology. The price action, the pattern definition, the responsiveness to a breakout. I just am not used to seeing that in penny stocks, and I think it's a function of liquidity. Technical analysis, charting, it's all a function of price discovery, and if the integrity of the data isn't there, the price discovery isn't. But to me, that speaks to how much money is coming into this sector and how consistent that inflow is and inflows and how broadening it is. I'm going to get started here on the presentation, but just wanted to bridge that gap. That's a big thing. We don't see that often. I've seen it twice before, and I'll go through that in a minute. The biotechs and the internets, interwebs, whatever you guys call them. Welcome. So I have been doing this for a while. Let me get this disclaimer. Make sure that's got time to be read. If you're playing this back, pause that. There you go. So that's me. Welcome. I have been publishing my analysis on the market since 1995. I was the first in my category to be published on, or to be listed on Yahoo. Launched the web's first traders chat through a site that I founded, and am now level 2 CMT. Fingers crossed, soon to be third. I cover everything. I created my own methodologies to analyze stocks, or just to do technical analysis with the tenets that anything that can be analyzed with one analysis methodology can be analyzed, if it's a valid analytical methodology, can be applied to any other market, tradable, etc. So during in 1990, and this is where I'm going to pause for a moment. In 1990, I was trading. In 95, of course. 1990 specifically, the story there is Genentech. Everybody knows the pharmaceutical company. 1990, they were a biotech, and they were big. Their market cap was, I don't remember the exact ratio, but something like half of all market cap for the biotech sector was Genentech. And Hoffman LaRoche came in and bought 2/3 of them. And suddenly all of the fund managers, all of the individuals who were looking for a safe way to be in the biotech sector, as opposed to all the dozens of other smaller, among them penny stocks, had all this cash coming back to them. And that cash had to go back in, and it was just a boom, not only to the existing biotech stocks, but it also attracted a lot of others, a lot of venture capital, a lot of corporate finance that suddenly had this new liquidity. Internet, of course, a little different. It wasn't a big booming factor like that, but still a wildfire that was lit. And it wasn't exactly 95 that the stocks started booming, but there were some huge swings. Big double-digit days were common among a number of those stocks. I think if the marijuana sector does what I think it's going to do, then we're going to get to that stage as well, both upside and downside, by the way. But I see similarities here in the marijuana sector, and we're certainly going to go through that discussion. So today, yesterday, Monday, we're launching the Marijuana Stock Technical Trader, and this is our kickoff event. We've already basically discussed my background, but just again, I've developed my own analytical techniques. There's a lot of mainstream technical analysis that that isn't entirely valid. It's not entirely invalid, but only valid to a point. And drilling down, I think we're going to learn as you log in every day and as you look through the charts that I'm providing of each specific stock, identifying the patterns, identifying whether it be the pattern itself, any volume associated with it that's interesting, or a Fibonacci measurement, identifying where the breakout is. Breakout isn't necessarily at a fresh high. A breakout can happen inside the pattern before everybody else is aware of it, adding sometimes double-digit percentage points to the return by being in early. As you see all that, I think you're going to learn. We're going to, any questions, I just love getting questions. I love talking about what is going into the analysis. So any opportunity to spread the information and the reasoning behind it more so, I welcome. So just so you know, I apply this equally to stocks, S&P indexes, mostly trading S&P futures during the day, and other sectors as well. That won't be part of this product, except it's actually more informative the other way around. Seeing so much interest in the marijuana sector at some point, as a matter of fact, at the beginning of the year, seeing so much interest in that sector helps to identify that the broader market might be topping when there was such interest in such speculative sector. Anyway, we'll certainly have stuff as we go through all of the analysis every week that speaks to that. Today, we're going to talk about what is technical analysis, go through a couple of basics, not a couple, but a few basics about charts. You'll want to, if you're a beginner, which there's no reason not to let me know if you're new to this, because that helps me to know not to get too jargony if I'm addressing a question of yours. But this will help get past some of those basics. Just the whole point of learning from history. History repeats in some ways. Of course, speak about this opportunity specifically, and then talk about tactics. It's not enough to just have the strategy. My strategy with marijuana stocks is to make money. Okay, now what? We're going to go through some of the different tactics, how to actually be on top of that. Just since so many of the marijuana stock sector are penny stocks, I just want to address a few points there. And then this is at the bottom of the list, but as you get to know me and hear more from me, you'll understand, or you'll see that that is at the top of mine. We are going to go through some risk control measures. All right, so what is technical analysis? Think of it as snapshots of mass psychology. You don't have to be a psychologist. You don't even have to be a financial analyst. Leave that to Alan, whose work none of us could match. And none of us could match the work of, well, maybe there are some people here who could match the work of world-renowned psychologists. But we don't have to do any of that. We just have to look at pictures. We just have to look at squiggly lines on charts, and by knowing to some degree historically how those lines, when they've lined up, have tended to play out, we can make some reasoned bets or investments, or expose ourselves to high probability outcomes. It is the supply and demand of buyers and sellers. We're not discussing the new product coming out, market placement of or positioning of this this company or that, any turnover in the C-suite, sales, earnings, etc. We're talking about the stock price and the volume data, open, high, low, close, and how that informs us as to where market participants, other people just like you and me, are interested in buying or selling, and more so. So everybody, there's always some price where somebody's going to buy. That's not what we're interested in knowing. We're interested in knowing where those points of equilibrium are that suddenly start moving price more aggressively in a direction, so that we've got that momentum and that greater probability of growing our investments. Not company fundamentals, sales, earnings. What does that do for us? We can identify short-term aggressive opportunities. We'll look at some, as I say, pictures, charts. And we'll see as I update the blog every day with the charts of this pattern or that, or this stock or that, showing a pattern that's under development, where to anticipate that it might break, what sort of behavior to know or to see that confirms, yeah, this is breaking, as opposed to just noise, errant ticks here and there. And those will tell us that suddenly, if you've ever been to an auction, for instance, charity auction, and you've heard bidding $20, $25, $30, and suddenly the pace heats up 35, 40, 45, 50. Suddenly everybody starts coming in. That's a breakout. We'll know where that's likely to happen. It also helps some of the tools or some of the techniques that I use or have discovered as far as measuring widths and time under development of a pattern can help to pinpoint where that pattern is, once it breaks out, is going to trend to. And once it trends there, the buying pressure that created that target having been satisfied, that trend ends or starts to end. Maybe it consolidates for yet another eventual breakout in the direction of that trend, the prevailing trend. Maybe it reverses. These are, again, these are patterns that have, because they repeat, have highly predictable, reliable, nothing's 100%, but anything that narrows down the likely outcomes can help us to lock in a profit, reduce our exposure, or in some cases, especially as these get higher priced, bet on a down leg. So again, as we start analyzing the charts, or as you look through the chart to see my notes, you can identify what sort of targets you have to look forward to, what sort of risk you're exposing yourself to while looking forward to targets. Nothing is 100%. Nothing is guaranteed at all to any degree, and that's why we always have some idea what sort of behavior, whether it's a specific price that needs to hold as support or to hold under the price of the stock, not be touched again, whether it's a degree of volume we don't want to see, that'll help to give us warning that this leg is done. So this is basics. This is not specific to the marijuana sector. It's not even specific to stocks, but just to get us on the same page, these are chart styles. Look down the left column, and these are chart styles, the three predominant chart styles: bar charts, candlestick charts, line charts. Now, line chart at the bottom is just a single price, typically the closing price, whether that's the closing price of the day or the closing price of that bar, that 1 minute bar, 30-minute bar. Candlesticks, bar at the top, a bar chart. A bar chart is more than just the closing price. It's the open, the high, the low, and the close of that period. So each one of these bars might represent a single day that opened here trended up a little bit more, reacted down, and then closed here, for instance. And each of those, if you can see those little notches, represents that. A candlestick is somewhat in between. Candlestick is somewhat in between because, like a line chart that just shows the close, you can see the different colors, and that identifies very graphically, a little bit better than a line chart, whether there's real movement up and down, or there's real sponsorship for movement up and down. I don't want to get too far off in that because it's not going to do us any favors right now. And also, I don't really focus on the candlesticks. But when you see these, if you're looking at charts and you see a chart that looks like this, if you want me to portray something in a candlestick, we can do that. But generally, this is just showing each one of these bars. If it's red, tells us it closed below its open. If it's or a dark color, if it's light color or white, it says it closed above its open. So interesting things like that. But we're going to move on from candlesticks to bars, and it doesn't really matter what to most patterns, whether we're looking at a bar, candlestick, line chart. The time frame can be much more revealing. So just to give you an example, here's a daily chart at the top. Daily chart shows, as we were just discussing, the open, high, low, and close for each of those days. Each bar represents an entire day. And I highlighted this area. If you look down at the next chart, this entire chart is actually this one area. Now, if you look at the daily chart, this is a pretty interesting uptrend. And it's pretty easy to, if you just look at the daily chart, fresh, not having looked at it before, trying to make a decision, do I buy this? Do I get involved at all? Looks like a pretty interesting uptrend. When we look at the hourly chart, we start to see, well, there's a few days here where it's really done nothing. It gapped up, but what has it done since then? Gapped up meaning that here's a gap between one day's close and the next day's open. So each of these bars representing an entire hour's worth of trading hasn't been able to improve at all since that extremely optimistic opening gap up several days ago. That might change our opinion or our impression as to whether this is really when we want to get involved, when buyers who are so enthusiastic as to create a gap up then couldn't find or attract enough sponsorship to continue pushing price through it, through that gap's high. So that's why we don't just want to focus on a daily chart. And by the way, we don't just want to focus on an hourly or an intermediate chart. Here's a 1-minute chart. That's this highlighted area on the hourly chart is portrayed in the entirety of this 1-minute chart. Now it looks like we're in a downtrend. Well, if we're looking for a spot, in fact, I look at this chart above the hourly, and I don't feel it's that threatening. I definitely want to find a spot to get involved in that because, yeah, since it gapped up, it hasn't improved. But since it gapped up several days ago, all that selling pressure has gotten sellers nowhere. It's definitely being supported. So if I can find a spot to get long, but to buy it, then I'm probably going to be interested in doing that, at least to see how it works out when it gets back to the high. I'll have a spot in mind. Remember that risk control where I don't want to be exposed to it anymore. I'll sell it even if it's at a loss because that behavior is suggesting it's going to become a greater loss. So I look at the 1-minute chart, and looking at the 1-minute chart, I can see somewhat of a downtrend and suddenly a gap up. That's of interest. So looking at the different time frames for a chart is going to be informative. I'll definitely label charts as I show you them so you know which time frame we're looking at. So here's some other terms that we're going to be using regularly in the analysis that you'll be seeing. And actually, I'm going to start with two that we won't, just to bridge the gap, because these are mainstream terms: trend line, moving average. I actually don't use moving average to a great degree. I really don't use moving average in the mainstream way, which is, here's a 10-period moving average, this blue line. The pink one is a 50-period moving average. A lot of people will use that just to get a feel for whether the stock is heading up or down. I like to just look at price. It's not used that simplistically, but a lot of people will look at a pullback to a moving average. I really don't see any value in that, or any extra value to that we can't get otherwise. But when you see moving averages, when you hear somebody talking about, look, this pulled back to its 10-day, pulled back to its 50-day. If we're looking at a daily, if we're looking at an hourly chart, it pulled back to its 50-period. There's a technical indicator called MACD, Moving Average Convergence Divergence Index. Don't write that down. It won't be on the test. But it is basically the difference between two moving averages of different length. That is of value. That will tell us whether momentum is increasing or decreasing. And that is of value when certain resistance points or certain overhead congestion, which is where a stock might have paused before, is being met. So, moving average, trend line, very obvious stuff. Trend line is a line of support drawn. In the case of an uptrend, you can see it misdrawn in mainstream usage. Somebody might draw a trend line across the highs in an uptrend. That's not appropriate. So in an uptrend, drawing a trend line, it's not predictive. It's of almost no predictive value. It's just interesting to note, look, it's rising. We're going to use things more like resistance and support, retracement and retest. Resistance and support, and the first time you hear these, they seem pretty obvious. They might actually be somewhat put offish because you think they're so simple. How can they just mean that? That they really are that simple. Resistance is just looking back when you see the stock price turn, when you see the stock price retested, that's resistance. That tells us there's some resistance there. That's a value that the market or the market participants generally feel is not worth buying more of than it's worth selling more of. And just as much, there's support. There's a low. We don't know that support at the time. It bounces. We can assume that might, or start to assume that might turn into support. When it's retested, we'll call it support. As in, it's testing support. How is that support resolved? That's going to be informative. We'll talk about that in the charts. But it really is that simple. Other supports, just because this example I'm showing, or my cursor is hovering over, is very short term, doesn't mean that support is very short term. Here's a support. It used to be resistance. It was a high. It was tested and held its test. That's resistance. It was retested again and then from above held as support. So support can become resistance and resistance can become support. Now we get into the stuff that makes us money. This is, previous to that, this is all just how to track something, how to be aware of what's going on. This would make us money knowing where a breakout is, knowing where trending is, knowing how to be exposed to the higher probability times, to the higher momentum times, less exposed when there's a chance of reversing and reversing more substantially. And when we know there's a reversal coming, being able to time or identify and price where that reversal might bottom so we can catch the next ride up. So here's an example of a breakout mainstream expectation, mainstream analysis is going to look at this pattern and decide, here's a couple of breakouts. They'll be looking at the pattern here. Here's a pullback. Here's a fresh high, breakout. Mainstream analysis would suggest buy that. That's actually a little premature for what I would do. I like to stalk a little bit more, see a better pattern, a better, longer, more developed pattern develop. Remember we were talking about supply and demand? I want to see more supply, more sellers, get as much of the offense, or get as much of the opposition out of our way, and then get the demand going. I've got a method. It's not mainstream. Yeah, I call it pivotal downtrending resistance. I'll teach you how to draw those trend lines yourself. You just won't see them on CNBC or anything like that. They can identify prior to everyone else knowing where the breakout is actually occurring. We would know right here, for instance, where this trend line is breaking. We would know that's the breakout. Mainstream is waiting for a new high before calling it a breakout. A lot of other investors are. And yet, there's a lot of money being made on the way. We will look at consolidations and be able to tell just from looking at them, comparing them to their volume, whether that consolidation, which is just what it sounds like, price overlapping, not trending up, not trending down, but overlapping, whether that consolidation is ready to reverse down or whether it's just pausing, just noise, waiting for better market conditions, waiting for, in this case, all the attention on the penny stocks or on the sub-dollar stocks to fade so that more of that money can be rotated into a GW. Now, I don't want to come back around to this to too great a degree, but just again, biotech's in 1990, internet's in 1995. A lot of similarities, and so knowing how this sort of a, not for lack of a better term, but let's focus on this one, gold rush tends to play out, we're going to be able to anticipate some of the better moves. There are a lot of traders out there today who are very seasoned, who got into the business after 2000. That's a pretty long career for some of these guys, and they don't have the background or the longevity, that is, to have seen this sort of a mania at its early stages. So they don't recognize it. They think it's either later stage. You're hearing a lot of dismissive talk. Some otherwise respected names writing on some other websites who are warning against being in this sector. They don't get it. Typically younger guys. This is a budding, quote-unquote, industry, or it's a shift of some focus. The marketplace is shifting to where it's getting a certain, whatever it is, fulfilled. In this case, this is obviously a new industry. It's been otherwise outlawed until medicinal marijuana. It's gaining in acceptance as the legalization wave, the decriminalization wave sweeps across the country, and it's very new. So mass consumer market, this isn't like the biotechs that suddenly we're going to take over healthcare in a good way, or internet companies, the infrastructure, the hardware, the software. Nobody had any. Nobody had a browser. Suddenly, everybody needs a browser, and everybody is going to be, in one way or another, their lives will be touched by the marijuana sector. there's controversy. So there's a wall of worry. The controversy being the older mores and societal standards that are being questioned, that hopefully we're shepherding ourselves through in accepting and incorporating the proper use of cannabis in our lives. Before that actually happens, a generation from now, there's going to be people like the ones I described that are dismissive of the sector, that are cautioning against the sector, cautioning against getting involved, cautioning their kids against going to schools in states where it's legalized. This is not made up. That just keeps the discount there. As long it's too bad that for them, and it's too bad for us that we can't buy something. Suddenly everybody accepts it, and the price goes to a level that is no longer represents fear. But that wall of worry is what markets and stocks, and in this case the marijuana sector, climb as price meets reality. High-profile event. I explained or described the Hoffman, LaRoche, and Genentech combination that suddenly freed up a lot of cash. The big watershed event in 1995 was Netscape going public. Mosaic. They were priced, and I was there. It was amazing. They were priced at, or they were actually the IPO talk was 14. They priced it at 28. They I can't remember their opening price. They went to 75 that day and settled in the 50s. I think 50. I want to say 58. That just gave the whole market a new paradigm. I don't think we've seen that yet. Actually, we've seen the high-profile event in the marijuana sector on January 1, when all the cameras were in Denver, Boulder, seeing the pot shops that were being flooded, and suddenly everybody woke up, and the marijuana sector stocks had a huge first couple of weeks. I don't think that's the event. That's certainly a big event to kick things off. Maybe that is the event. But from a corporate markets standpoint, or from financial markets standpoint, I don't think we've seen the big financial event. Like that's just much more on par with Hoffman buying such a big chunk of Genentech, or Netscape IPOing. So I'm looking forward to that when it happens. So, how can we exploit this situation? Not profitably. I don't want to say profitably, or that we don't want to make profits, but we want to keep our profits, and we want to have our funds available to chase profits, or get positioned for profits when that opportunity arrives, or when those opportunities arise. To do so, we have to be responsible in our decision making. Obviously, buy low, sell high. Okay, eventually we're going to reach a spot where, as everything happens, everything eventually tends to, gets carried away, gets extended, has to enter a bear market, or at least a corrective phase. We'll want to sell high and buy low in that case. That's something we'll certainly be covering in detail on the service when the time is right. But if we do so irresponsibly, we're going to erase those profits. We might even eat into our capital. And when it's time to buy better, if we've gotten too hopeful in the wrong spots and stayed too long, then we're not going to be able to participate. Here's, for instance, if you look at this green circle, you can see that's that area. That is that part of the chart expanded. That's just blown up. Just looking at a little greater detail. Do you remember that chart we were looking at previously? This is that breakout, overly enthusiastic. There's things about that, I'll be pointing them out at the time when we see them, that says that those things might say that there's some proof to be had here that's perhaps a little too aggressive, and if it's a little too aggressive, it's not at all attractive. These people that were buying here, if they didn't on that day or the next day or a couple days later start realizing that is just the wrong play to make at that stage, then they held on, and they saw they were, first of all, very uncomfortable. Secondly, eventually, they might have sold. They might have finally decided, you know, I missed it, that was wrong, I took the wrong cue. For whatever reason, finally down here decide that was a mistake. Down here. And then being all upside down, being all discombobulated, and turned around, they were looking at this the wrong way, being glad to have gotten out, or being sorry to have bought early, or to have bought when they did, or whatever the case, not participating when they should be from where they should be. So we want to be responsible. We're not chasing breakouts. There are some breakouts. Boy, in the last week, just in the last couple of weeks, there have been a number. Those are very spoiling. The bad thing about how well the marijuana sector is doing is it is going to make a lot of us spoiled and seem impervious to bad decisions, because bull markets, as I think it's been attributed to Bernard Baruch, bull markets make geniuses of us all. And unfortunately, that's not how things work over the long term. So that's part of what I'll be bringing to the table then, is identifying when a breakout is valid or not, and when to be involved early, so that perhaps we'll be long on these situations, or know to sell these situations. I actually wouldn't have sold that one. I'd have still been pausing, but we're going to get there. So strategy. In other words, strategy is, what is your purpose? There's a question. I've already looked at Alan's site, and on the 420 Investor there were some questions already posted. I haven't responded to them yet, and I will be. But some questions, such as one question that jumps out at me that looking at this slide is, why would I want to trade when these stocks are going straight up? And that's fine. And if that's your style, is to buy something and put it away, then that's what you should be doing, because you should never be doing anything in the market that you're not comfortable with. We're going to be looking at charts and looking at historically how specific setups, specific sequences of price action, how they tend to play out. And we're going to be getting a degree of confidence. But if you're not comfortable with being in and out, if you're not comfortable with buying something so that in a few weeks you can get rid of it, or if you're not comfortable with selling something at a loss because there's potential, not assured, but potential that it's going to continue going down, if that's not your temperament, you shouldn't be doing it, least of all with your money. And I've got a link there specifically for day trading. The SEC has a really just a good discussion of what you should be considering, just to get your mind in that mode. But let's talk about, if this is your temperament, what it means to invest, buy and hold. That's not my temperament, by the way. I do have some. I happen to, I have Vote, MCIG, EDXC. I've got a few of these that I bought back in January. I've added to, I've traded around, but these are, I for whatever reason, just in full disclosure, those are three that I happen to think just, and this is dangerous when you ask a technician for his fundamental opinion, but for various reasons I happen to think those are going to be around for a while and ride the wave one way or the other. or to one degree or another. Those are buy and hold for me. But I'm also buying and selling other shares. I've sold in and out of some Vote and MCI along the way. MCIG. Day trading is the opposite end of the spectrum from investing. Day trading is go home flat. You own something during the day, you bought it that day, you sold it that day. And maybe a few times, maybe a few different things. But the point to day trading is quite the opposite of buy and hold. And to some, buy and hold is like a massive ground movement in a war of moving your troops across the battlefields, or to the battlefields in some cases as you're waiting for the action. Day trading would be a surgical airstrike. If you're moving your troops across the field, they're all exposed, and they're exposed for longer periods of time. The surgical airstrike, you're in, you're out. Guess which one appeals to me more? I actually don't day trade other than futures, and really other than S&P futures. I actually don't want to be anything but flat overnight in S&P futures. But intraday I will be in and out several times. I don't like doing that with stocks. To be clear, the marijuana sector is going to offer and has been offering, and I think will offer much more so those opportunities. But generally, and eventually even in marijuana stocks, it's a very tough slog. By the way, if you do day trade, if you execute 4 or more day trades within a 5 business day period, then you have to maintain an equity of $25,000 in your margin account at all times. And I am not that up to speed, since I don't day trade and am not a proponent of it. I would advise, if you're going to do that, if you're going to do anything that's even close to this, definitely get aware of what those rules are. What I do is swing trading. I'm only looking at legs. So here's a swing trade. This is our chart again. There's the breakout that I would identify. Based on the measurements, I've even identified when I was looking at GW what the target area was based on the pattern. Based on the pattern, here's where the swing trade would have been bought, not knowing that I'd be out whenever, in a week, 3 weeks. Here's where it was, what the first target was based on the pattern's measurements, and the next target. It got through the next target. It could have gone on even higher had it not done something specific in here. And in fact, it did head higher without ever signaling that momentum was reversing down. If you're a swing trader, you're going to have a decision to make up here based on what your strategy is. Remember your temperament. Are you going to hold through what might be who knows how long consolidation that eventually could resolve down? Are you going to hold for even bigger potential? Sell well off the highs, still having some profit in there. The trade-off to maintaining your exposure for the potential upside. For a day trader, you're just looking for these spikes up, for those legs. Now, if you are a day trader, I'm not trying to be dismissive of it. Just it's not, just to let you know, if you're a day trader, it's not my focus. If you're not a day trader, I'm not at all interested in convincing you to be. But if you're a day trader, there is something interesting to my analysis, because I do identify what you'll hear me call inflection points. Inflection being where suddenly as if there's a new psychology without even any news, typically without any news. Suddenly, one paradigm, or there's a paradigm shift from one, say in this case, flat to lower, to, okay, we're done with that, now we're moving higher. There's different breakout points, inflection points that myself will identify, or I'll point to a level where, if you're a day trader, you'll certainly want to look for other indications coinciding with those, with that price being met. but it might be of interest anyway. This is something else. While what I'm doing is swing trading, what I'm providing the analysis for is looking at specific legs. A break here should extend to there, or as long as this doesn't happen, maybe even to there. Position trading is a combination of investing and swing trading. It's a combination of investing and swing trading. You may have a stock you like. I'm going to say I like FOAT, and that is that's great. But I'm not going to put every single penny I own in it. And when it gets overvalued, when it starts to take up a greater share of my portfolio that I've got allocated toward that sector or that type of stock that's capable of making those huge moves, if it's capable of making a huge move to the upside, it's entirely capable of making a huge move to the downside. And if the market wants to quickly take price up to a point where I happen to think all those buyers are satisfied and it's going to need some new sponsorship to get it any higher, and maybe I want to shift some of that capital to another opportunity while waiting for that, then I'm going to trade around my position. So by the same token, if I liked that position so much, then on that pullback, if I identify where should a pullback end, how low should it get before it's capable of taking off again, or before it just must be so rid of so many sellers that even without new buyers coming in, the shift of supply and demand is going to make price rise anyway. And I want to leg in, and I want to increase my position because I do love it, because I do want to sell the house and mortgage the kids and put everything I own in that. Well, not both kids. But if you have any questions dealing with any approach, any tactic, I hope you'll bring it up. I can't, of course, address anything specific to your own finances or your own situation, what's right for you versus what's right for that person. But as far as what's going on with the stock and whether a particular timing window makes sense to get exposed one way or the other based on this strategy or that, definitely bring it up. So, if you're a beginner, then again, tell me what your temperament is. Tell me what your understanding of this jargon is. If we're talking on the message board or on the chat. But what I can tell you generally as a beginner that I can't tell you specifically, because I think this is the way people should start out, is focus on having these thoughts in mind and these characteristics to those stocks that you do play. They should be liquid. And there's a number of stocks. I stayed out of Can, for instance, for a while because I just didn't like the volume level. I liked the pattern. I liked it on a pullback. I think my number was 1250, and couldn't resist being exposed to some degree. So I limited my position because it didn't have the liquidity that I'm used to. And I'm sure there's a lot of people here who know how that played out. But otherwise, the liquidity affords you the opportunity to get in and out at a decent price. One of the problems with that we're going to talk about with penny stocks, when they're not very liquid, the lower they are, the lower price they are, the bigger that difference between the bid and ask is the more that represents of the actual capital that you're holding once you make your purchase. If you've got a $1.50 bid and a $1.55 offer, which is not at all uncommon for a less liquid stock, then you buy it at $1.55, immediately you've lost a nickel. And we may be spoiled by the current environment in marijuana stocks that, well, that nickel's going to be made up for many times over by 9 a.m. tomorrow. Not always, and actually not usually. So the more liquidity there is, the tighter the spread, the less that the stock has to make up for. The easier it is also to get in and out. If we want to have some exposure, if you want to have a few thousand shares, and everybody has a few thousand shares, suddenly there's talking about some real money. And everybody trying to get out of a less liquid stock at the same time at $1.50 won't get $1.50. So just to limit your exposure, because it's enough to be learning this stuff. Even if you're sophisticated at this, you already know, you already agree with this, I'm sure. Why do you want to be dealing with licking your wounds when we should be dealing with looking for opportunities? Keep strict loss limits. There's no hoping and praying in stocks. Not from week to week, maybe from day to day, but you're not going to be there a week later. So you have to determine how much, before you even buy, how much am I willing to lose? Where does Rod say, for instance, is the support on this? How deeply can it pull back without having some concern that perhaps the uptrend isn't going to play out? And then be sure that you've got some specific plans to exit based on that. Scaling in and out. This is a little more difficult than being all in or all out. But if you like a stock into weakness, if you want to buy some into weakness, but you're not sure that that is the low point, you know, I think when CAN, for instance, went down to CANN, when it went down to 1250, it actually spent a couple more days flirting around in that area. It never got below what I was considering to be a strict loss limit at that point. But if it had gone down just a little bit more, I was actually in a position, standing ready to buy a little bit more. When it started coming back, breaking up through 14 and a quarter, I scaled in some more because the stock was actually performing. It was doing something that it needed to do. Volume was expanding. I was getting more comfortable with it. But I had a limited position to begin with. But again, as we get into, just bring back another point, as you'll see, even though we're all used to marijuana stocks doing really, really, really well, sometimes they won't. And not just for a couple of days. And not just this stock in the marijuana sector is not doing well today because the focus in the marijuana sector is shifted over here and that stock's doing well. But even the broader market as a whole, altogether, everything might be pointed downward. And for now, it's going to be difficult playing shorts. There's only a handful, not even a handful, of marijuana plays that are optionable, where you can actually buy an option. I'm not going to be picking options. This is not an option service, calls and puts. But until then, just keep in mind, cash is a position too. Cash, if you want to be exposed to something you know isn't going to go down, that's cash. If you're experienced, then you can operate like this is the Wild West, because it is. You can short, you can get options, you can day trade. If you're going to trade options, there's a couple of links. I can get these back to you if you need them, as far as what the risks are, and there's plenty. What I can identify is potentially time frames where different moves should work out. And that can help you, if you're an option trader already, to better inform your position or your decision. But again, I won't be picking options. So this is, I think for a lot of beginners, this is going to be the most important slide that we look at. What sort of decisions you make when you enter. What sort of decisions you make when you exit that might tell you to exit, decisions that you need to be comfortable with, if not to have already made before even buying. Order types, if you are that much of a beginner where you don't know the difference yet between a market order or a limit order or a stop entry, not a stop exit where you're trailing, you've got a stop, you've got a stock that you bought at 10, it goes to 15. You want to, you don't want to own it if it's under 14. You want to make sure you lock in at least, or at least try to lock in that much profit. So you have a stop loss. That's not this. This is a stop entry. If you don't know what that is, and certainly if you don't know what a market order or limit order is, and you're posting a question to me, don't be evasive or, and I'm not saying that, I'm not accusing anyone of this. I don't even know. Anyway, this is something, though, that I know when you're a beginner, it's easy to feel shy, and I'm asking you not to. I want to address that because it's really simple concepts. Once we get past them, you can learn so much more. So let me know if you don't know where you are on this, in this big slide of things, how much you do and don't understand. For entry decisions, a breakout. Remember the chart we looked at, where we see a breakout happening and price starts trending and it extends and extends. Do you want to wait for that breakout? Do you want to position ahead of that breakout? If a stock, I described the can situation, stalking it as it pulled back. I was looking for it to pull back and at least touch 1250. Do you mind buying something that for the last week has been heading straight down? Do you mind buying something that it's been ranging sideways, not trending upward, and suddenly you're going to commit some of your money to it? These are decisions to make in determining where to buy something. Do you want to buy something that had a really good day today and already it's up 15%? What is the one? I think it was a 8 or 9 cent stock at the beginning of the week, and it ended at about 20 cents this week. It had a really good day early in the week, and a lot of people would have said that's enough and missed the lion's share of the move, or not bought it had they been stalking it. Decide how aggressive you're going to be. Just a word about averaging down. I'll do this with rare exception, or I'm sorry, other way around. Sorry. It's the rare exception when I will do that. Averaging down is usually throwing good money after bad. I don't mind buying more of a stock because I don't always get entirely exposed to a stock early on. I just start nibbling sometimes, depending on the situation. But as the stock convinces me, as it does things that it needs to be doing that say, look, more people are buying in, or as the company perhaps does something, as it convinces, adding or scaling into, as opposed to averaging down, buying at a cheaper price just because it's a cheaper price. Why is it a cheaper price? And why would I be throwing more money into it if it's suddenly cheaper? We're going to really be timing or trying to time bottoms, identifying at least we don't have to wait for a bottom to buy because sometimes it's just a potential bottom. But we're going to be pretty focused on what the low is. So there shouldn't be a lot of averaging down. I've got a stock I bought at 10 and now it's at 9. I'm going to buy more. Unless there's some reason for that. If it's intraday and the broader market is down, and so maybe it's just an anomaly, temporarily down and ready to recover potentially, we're not going to be doing that. As far as exit decisions, this is a big question. I mean, it's really, especially, again, in this kind of market, not to beat a bucking bronco, we'll turn on the dead horse phrase, but this has been a very an outperforming market, and this sector is I think, going to continue doing well for the reasons we've discussed. But even then, I think a lot of you have seen some of the posts. A lot of you have already come to see that even in the strongest uptrend, you don't know where to sell. And that is one of the tougher decisions. It may be really easy to, shoot fish in a barrel in buying something, and it goes up, but then you can feel just as uncomfortable with not knowing where to sell. Do you sell strength? Do you sell when there's a reversal back under some low or some pullback limit? Fibonacci's, you'll see on my charts, it is a calculation. I'll let you Google Fibonacci, but it is a percentage ratio relationship that tends to appear throughout nature that my own methodology incorporates to identify where price is likely to extend to and where it shouldn't extend beyond, whether it's up or down. So if I buy something at 10, it goes to 15. It better not drop under 13, or that move to 15 is done. That was the top. So I might set my stop at 13. So I want to sell into resistance just because that's where it peaked last time. So I'm going to sell it there when it gets there again. Or to have a stop, an actual order sitting there. I own this stock, but I own it at 10. I want to get to 15, but if it prints 9, if it trades at 9, my stop order will trigger automatically and take me out of the stock. A 3-day surge. This is one of several different setups. There was one stock I've seen in a long time that has broken this trend, TRTC this week. That typically when you get these moves, and this is one of the setups that I discovered during the biotech craze and used quite a bit in the internet craze, the craze stages, and we're seeing them among a number of marijuana stocks now. 3-day surges. That third day, typically that third morning, is the end. TRTC actually went on to one extra day, and I think that was because of all the publicity that it was getting. Real quickly about penny stocks, and then I think we'll be doing Q&A. So what is a penny stock? When I refer to it, it's really just a name that came. We used to trade these things in quarters, quarter points, halves, eighths, sixteenths, 32nds, 64ths. You could see a lot of stocks, lower price stocks, that were trading in fractions like that. Pink sheet stocks, what was called pink sheets, more widely used as pink sheets at the time. They were typically quoted in penny strikes, and so that was before decimalization of the entire industry. So it's just a name that applies. But anything that is trading even around $1, sub-dollar specifically, but even if it's trading around $1, it's really a penny stock, and there's a different kind of mentality that doesn't pervade it necessarily, but is there. So we care because they comprise currently a majority of the cannabis stock universe, and so we want to be aware of what some of those factors are. There's often a thin float or capitalization or turnover, the volume, the daily volume, and we discussed this a few minutes ago. That raises the risk level. Now, risk is a trade-off to profit, and there are penny stock hucksters that use that as their selling point. Take on all this risk because that is hand in hand with profit. Sometimes that's true, but it doesn't matter how true it might be. Risk is risk. That's a big one. If everybody's going to head for the exits at the same time, it doesn't matter how much you've got into it. It's suddenly going to push price down. The thinner the float, the thinner the usual volume, the deeper the reaction down. You get relatively wide spreads. We talked about this as well. Between $1.50 and $1.55 is one thing, but if you have a thinly traded 50-cent stock 50-cent bid, 57 cents ask. That's a tremendous rise. Markets until the last couple of years with TARP, and QE, and QE 1, 2, and 3, and 15 don't rise the way they have year to year. But somehow a penny stock that has a 14% spread between bid-ask is supposed to outperform what the market historically does. There's so many opportunities out there. This is one to stay away from if you can. Again, in the penny stocks that make up the cannabis universe, we're seeing so much money come into the sector. I don't have those fears or those qualms about a number of them. But we're going to see eventually, and Alan, I think, is going to uncover as time goes on which of these stocks maybe aren't going to last, and they're going to go back to their patterns will revert, their characteristics will go back to having these features. But again, inconsistent or unreliable filings, that's Alan's purview, and he I think I can't even count how many times I've seen him be critical of something like this. So as long as he and others are paying attention to this, that I think helps. And Alan, by doing so much, to look so closely, to speak to so many in the industry, has made sure that more and more people are aware of, or more and more of these situations where there is a company that's not filing reliably or not filing, that's known. And that's created a greater degree of confidence, attracting more and more players. So just for all of these reasons, that sector is vulnerable to manipulation. The liquidity of so many people coming into the market, so much more cash, so many more eyeballs, is helping to offset that vulnerability. And again, the potential gain really masks the loss potential. Yeah, there's risk. Just think of all the money you can make. Be careful when you hear that. I'm sure everyone here knows that. So risk tolerance is a big deal to me. What's more important than profit? Having your capital not at risk. If you're going to have it at risk, have it in a high probability payoff situation. And, when we're in a stock and it seems to be moving, or it hasn't yet moved and we're waiting for it to start moving, we can hope and pray. We can't control that, but we can control risk. We can set our stops. Even if you have a stop, a actual order sitting out in your account to sell, to trigger a sell signal, if a price is crossed, a price below what you currently own a stock at, there's no assurance that that's the price you'll get. We'll come to find a number of these stocks closing one day at $1 and opening the next day at 80 cents, or at $10 and opening at 8. I don't need to tell you that, I'm sure. We're going to expect wide price swings intraday. In the last week, you've seen that. In the last month, the last quarter. Those are only going to become more common. So anything we can do, those put us at risk, but if we're patient, then those are opportunities as well. If we know from looking at, for instance, the charts that I'm going to be providing, if you know, well, this stock closed at 20 yesterday, and it sold off this morning, gapped down and sold off, and it's testing 17, and Rod's pointed out there's lower prior highs there. Volume was rising into the rally. For whatever other reason, there's a pattern that was playing out previously whose target has yet to be met above. Maybe I'll take advantage of that gap down, that trend down. But what we don't want is to not have a plan if we're in something and it reacts down. And then, not yet finally, there's one more slide to go, but the if you're new, I don't want to make that much about this, but you can get a trading simulator from a number of different sites. that will let you practice operating in a volatile environment. I believe, as I know Alan believes, that this sector has a long, long growth curve ahead of it. So there's no rush. And it might seem like this is shooting fish in a barrel right now. I think there's going to be other environments like that as well if this one is suddenly done. There's no rush. The only thing there's a rush to do right now is to make sure you enter this environment responsibly. And it's really tough in the heat of things when you're using real money to step up and buy something that is down in price suddenly. If you've had practice at it with a trading simulator, then buying into weakness or selling into strength or honoring your stop, then you're going to be that much likelier to do that correctly in real time. And try to identify, there's different strategies, there's different approaches. How many positions you own is not a function of how many positions you want to own. Well, I want to own every stock in the marijuana universe. That really doesn't get you very far. I only want to be paying attention to, at any given time, 7 stocks. So, divide my account by 7? No. Actually divide half your account, or 75% of your account, by 7. Always have a goal of having, remember cash as a position too? Always have a goal of that being one of your positions. Because if you're fully invested in those 7 stocks and suddenly there's bad news, the Fed decides we are taper off, and QE 22 is now upon us. Or the other way around. There's a disaster that drives price down. If you don't have that 25% available to take advantage, you're stuck with those 7. Always use stops. There's strategies that decide what's 2% of my portfolio value. As an example, I'm not saying this is the choice to make. How much can this individual stock drop and take my total portfolio down by that amount? That's one way to guide you into determining how much risk to take on. Notice that doesn't have anything to do with the stock pattern. That's the other side of the story, or one of the other sides of the story, and that's the part that I'll be giving you. Not a lot of these are marginable, or have been marginable, really, until they reach certain points. If you're new, and even if you're not, you already know this. Be careful how much you borrow to buy these, especially with these swings. Yes, the leverage is going to make you a lot more money when the price goes up. It's going to take you out of the game when price goes down. It just takes one bad day. So, I am launching this service on MarketFi, and very proud to be associated. We'll have real-time trade alerts. You'll actually know in advance from the charts that I'm providing where I will be sending out those alerts. Or if something changes as far as what's in a chart, or the charts don't ever change, but as far as something changes, like intraday price is already doing something, there's a reason for an alert. I'm very specific in my analysis. I want to know a specific price to the penny, or at least a specific range, not a general area, fuzzy. If it goes up, let's buy it, and a specific exit price. And an exit, it actually refers to profit or loss. If something we buy goes up, then we want to know where to exit it into strength. What's our target? Or if it pulls back too far, so we don't give back all of the profit. But we don't always have that opportunity. when we buy a stock, if it doesn't immediately do what it needed to do at that inflection point, if it inflects down instead of inflecting up, we don't want to get inflected by that. So we've got a exit price also specific, known before even making an entry when determining does the risk versus reward make sense for my temperament. Those are prices that I identify on the charts. I hope that from our little talk today, you've got some taste of the guidance and the education that I provide. There's a chat room, private just to subscribers, so all subscribers can talk amongst ourselves, and I'll be there as well. And the trading alerts are real time.
And hey, Rod.
You can access it. Yeah, right here.
Hey guys, and this is Kyle again from MarketFi. I dropped the link. Rob's talking about his marijuana stock technical trader. I dropped a link in the chat too, and I think this might be coming up. But we're going to go to Q&A. We got a ton of Q&A, Rod. A ton of great questions from you all. Since we're launching today, we're actually offering the marijuana stock technical trader, and there's a slide Rod just pulled up. Half off today, okay? So if everyone can just really quickly let me know before we get to Q&A with Rod, is the link working that I just dropped in the chat? I just want to make sure that that's taking you guys to the right page. This is the only time we're going to offer this because it just launched today, okay? All right, Sean, Naveed, Brad, Tony, Hank, Nick, great. Looks like the link is working. Again, it's half off for the first month to the subscription, and there's a 30-day money-back guarantee. So Rod, this is his first time he's had a product on MarketFi, and one of the things that we do as a marketplace, and we've done with Alan, is we're the company that helps support Rod with customer service, and we also vet out these traders. So I've personally vetted out Rod to come onto the site to bring this kind of education, trade alerts, industry knowledge, technical analysis for you guys, and we actually built this specifically for you. So I want to just, I'm really, really happy to be launching this today. So we're giving it for half off. Again, it's just for you guys. It's just for this webinar. So make sure to take advantage of that. And again, it's a 30-day money back guarantee. So there really is no risk to you guys if you don't like it. All you got to do is email support at MarketFi or call us. Our number's everywhere, and we'll take care of you. Okay. So beyond that, Rod, how you feeling, buddy? We're about an hour into it, hour and 10 minutes into it. You ready for some Q&A?
Awesome.
All right, I'm going to start shooting some questions at you, okay? And let me know, and we can just keep going down the list here. So everybody keep coming in the chat room. We'll get through as many as we can here, okay? So, Rod, I got a lot of questions about specific tickers. I'm going to let you go over that in your chat room, especially starting on Monday. And you guys will actually start doing a lot of technical analysis and actually looking at the charts of the stocks. I feel like that's a better place to do that. But what a lot of people have questions on are more of the specific stuff. So one of the questions I really liked in here was from Cody E. And Cody says, let me just pull this up real quick. Is charting analysis relevant even for inflated market caps, such as what we're seeing with some of the stocks in the cannabis market right now?
Yes. Everything is a function of supply and demand. There are market participants that are dominant at different stages. We don't need to know the different stages. The thing that has attracted me to charting and technical analysis is it is a commonality across all spectrum. And when we're seeing overly inflated or on the way to becoming overly inflated, there are specific signs and calculations that can be made. So we have a much bigger leg up in how to react, what to anticipate.
Somebody came in for the chat room. Can you explain what everybody will be getting in the chat room for your service a little bit further?
Yeah, and it's basically this list. And then one other thing. So the real-time alerts, the very specific target entry prices, etc. The one thing that's not on the list is the charts. The blog. It is a blog at its core, and the blog posts that I make are specifically, here's a stock chart, and the annotations on the chart where I identify the pattern, outline the pattern, and explain on the chart this measurement of this, when treated in this way, tells us that here's the breakout, here's the target, here's the risk, and then a narrative, a little discussion in the actual text of the blog post explaining all of that. And so that's a big part of it, especially if you're wanting to learn.
Sean W., and I'll answer.
But also just as a repository, if you want to come in fresh, sure.
No, go ahead, Rod.
Go ahead. Well, I was just going to say that if you want to look back at a stock, if you don't, the more stocks we have, because the calculations don't change from a historical pattern that's already developed, you can go back and do all the research you want at any given time in real time. You don't have to wait for me to respond to you. Pull up the chart with my notes.
All right, and Sean W. just came through, and I'll answer this one. What's the difference between subscribing to this versus the 420 investor? Sean, that's a great question. It's two different styles of trading, really. The 420 investor is great for fundamental analysis. It's a big community that's looking at what the companies are actually doing and fundamentally underlying maybe where the company's going, the long-term view, short-term view as well. What Rod's launching, and we launched this because of all the feedback from 420 Investor, and you can absolutely subscribe to both and still find both very useful, is a technical analysis type view, a day trader type view, or even using the technical analysis on a short-term basis and entries for long-term. It's really about what the market is doing. As Rod started off this presentation, technical analysis is really just the psychological element around what people are willing to buy and sell a stock for. And it's a really unique aspect of that. And Rod's also pairing with it a lot of education to help the beginners that are coming into this this sector really understand how to look at buying and selling stocks. And what Rod hit on last is one of my favorite subjects is risk. A lot of people just look at buying something and selling it and what can they make, but they never look at what they're actually risking. And that's really important too. So let me know if that adequately answered your question there, Sean. All right, so the next question I'm going to go over with you, Rod, is Guapel G just asked, how many tickers will you follow and give guidance on? Do you have any answer for that, Rod?
Yeah, generally, we're going to try and have a chart from some point in time on anything cannabis related. And that's not to say, I mean, the question is great, and that answers the question. But I think the next question that would be asked on that is how often are they going to be updated? So if something is moving, obviously, or has triggered a move, or has created a new pattern or changed the pattern, I'm going to update the chart. In the last few weeks, for instance, there'd be a lot of updating going on. But generally, if you look at Alan's universe that he follows, definitely all of those will have charts. And definitely all of those will be monitored constantly for any changes that need to be commented on or updated. But another big thing that I like to do, and I'm not really prepared to do this immediately, but as we have launched the service and get all of the delivery worked out, you all will be totally free to ask me to look at a stock. I wasn't even aware of FitX. I posted something on Seeking Alpha a couple months ago, and somebody said, look at FitX. And again, coming from the penny stocks are scary background. And here's a stock. I charted this, and it was so responsive to the patterns. And then it had a buy signal at 2.75 cents. What kind of a stock has a buy signal at 2.75 cents with a target of 10? It ended up going to 12. I would not have known about that if not asked about it. This person was way ahead of its relationship with EDX, etc. So you'll see that pretty much anything Alan's got covered. I'm going to make sure there's a chart too, and my comments, but also you guys asked too, please.
Rod, one more product question I want to get answered before we get back a little bit more into your kind of strategy and what you're teaching. How many trade alerts do you expect a week? Do you know yet?
No, I really don't. I will say that as I don't really want to focus on that because you're going to see the charts, and I'm not saying the service won't focus on that. I'll send out an alert if there's something you need to know that you don't already have the knowledge. If the chart is there, and this is in the blog, the chart is, for instance, EDX. The chart right now would say a close above 24 cents targets a retest of 30 cents. That's literally the pattern in play right now. It's already triggered a preliminary signal. When you see the chart, you'll see where it triggered a signal in a pullback to 19 cents that ultimately held. And you'll know the specific target. First of all, the attraction back to 30 cents, and that when if broken, what its specific target is gonna be. There, I've just said all this. I'll send out an alert when it starts playing out, if it starts playing out. But you can see the value is really going to be primarily in having that chart right in front of you and knowing before. This chart has been basically the same chart for the last several weeks. So you're going to know well in advance of everybody else. The alert is actually going to be a reminder. And whenever there's something to remind you on, this chart is doing this or that, that's when you'll get an alert. The sector is not going to be as active always as it is, but when it's active like this, you'll be getting quite a few.
All right. Kit, Wayne, and a few other people asked, what is a stop entry?
Stop entry is literally a price sitting out there that in your account where you've identified when this specific stock touches this specific price, I want to buy this many shares. The difference between a limit order, which is between that and a limit order is if you're trying to buy a stock, it deals with a stock price going down. So the stock is at 10, I want to buy it at 9. So I'm going to throw a limit order into my account to buy that stock when it gets down to 9. If it ever trades at 9, I own it, however many shares I designated. A stop buy says the stock's at 10. I don't like it at 10. I want to buy it at 11. I want to buy it when I know everybody else is into it because it can sit here at 10 forever, and I don't want to have my capital tied up. But when it trades at 11, I know that means that people are moving in. So I'm going to have a stop entry when the price trades above where the price is currently, trigger my order.
And Weed Equity asked, can you use stop loss orders on penny stocks?
You know what? I don't use that enough to answer specifically for any brokerage. I'm not really familiar with using them for penny stocks, so I don't know what to tell you on that.
All right. Next question I have is actually, Rod, are you able to pull up a chart right now?
Yes.
Is it possible? Can you pull up TRTC? I do want.
I happen to have it.
Great, perfect. So Brad W, and I know we kind of went over some of this, but get some clarification. I really like this question. You're looking at TRTC with everything you're doing, and Brad asked, what's a good pullback entry point on TRTC after the recent surge? And I kind of want you just to walk through when you're looking at this chart, how you would analyze it, and maybe not answer that question, but answer the question of how you would look at TRTC and trade it.
Yeah, I'll touch on the highlights. I actually started looking at it after this consolidation. The only reason that I didn't buy it on this breakout is because I'm not actually the smartest guy. Anyway, this was a good buy here. I didn't personally buy it until this breakout here. It's actually in the portfolio, but on this day, it was already up. It was already trading higher. This is an instance where I want to see others getting involved. I liked the volume on that day. You can see. Where's my tool? There we go. On this session, where price is rising already in the morning, if we look at the breakdown, actually, let's just do that. If we look at the breakdown of price action that morning, pretty early on, there was movement. And it was on a upswell in volume. There was something going on, and it doesn't mean there was some news out. It means that suddenly, as many people as could sell had sold, and they weren't getting anything done. Buyers were getting more comfortable, and so it started shifting up. I happened to have at the time been following the pattern. This pattern informed me I didn't have to be involved in it for this pattern to give me some clues as to where price was heading. And as price headed there and behaved in specific ways, for instance, I'll look at the Fibonacci pullback. Here's the last relative low of that move. And to the highest close of that move. I love a 61.8% retracement. That's a very common, very healthy retracement. So in other words, from this low to this high close, there was a 61.8% retracement. I'm very interested at that point. Not necessarily in just buying it there, although if I were interested in buying weakness, that'd be one spot. It immediately recovers back above the 38.2 retracement. I know that selling is done. That doesn't mean that buying is now going to pick up. I'm still looking for clues. And the chart at this point would point that out. This is all we know at that point. This is all we see, that there's been one up leg. It's been corrected. If it's going to go any deeper, then it's not finished correcting. In fact, I would say if it went any deeper here, it was probably heading back down to 15 cents. It held that pullback. So if I were legging in, if I'd already been involved and wanted to add to my position, I'd probably start adding there or on some higher close. But in being a trader and only wanting to be exposed to the moves, this is where I started buying, where you can see where volume started picking up. Actually, you can't see. If you can see lower right corner, absolute lowest right-hand corner, you can see that volume bar just start picking up. It had already started picking up a little the day before, but price was starting to move on that. So, honestly, this move surprised me, the degree. But when I knew not to stay in for just a 15% or 25% move because this is a 3-day pattern. What my patterns say is on this specific kind of a breakout, and we'll go in, this is not the time or place to go into that, on this specific time or this specific kind of a breakout, sell it on the 3rd day. Don't sell it before that. So whatever the measurements are I'm looking at, I've got to wait for that 3rd day. This actually went on to a 4th day, and again, I think that's a function of boy, who was Kramer talking about? I mean, just it got a little bit longer in the media cycle, but it actually got some exposure in the media cycle that most don't. That 3rd day's high has pretty much held since then.
Good stuff, Rod. That's the kind of stuff I love, man. Everybody, I just asked how many people took advantage of the special, and I see 70 people already. That's awesome. We're not going to be able to keep it open forever, so if you guys are looking to get in, please do. Rod, jump back over.
I want in. Can I get in?
Alan, maybe. I'll see if I can pull some strings for you.
I thought half of those subscriptions were yours, Alan.
Yeah, my friends and family. I just want to say you did a great job. I know we're still going here, but and I'm still here, but. I want to sign up. That's all I want to say.
There it is.
Awesome.
That's the best recommendation you can get right there. Hey, Rod, while we're on that topic, can you pull up the slide that goes over what is in the product again? I have like dozens of questions on what it actually offers again. Perfect. Real-time trade alerts. Jorge, John, Ralph, Jacob, everyone's asking. Real-time trade alerts. You get target entry and exit prices, which is, if you're a beginner, that is so huge. When I was learning to trade years back, the mentor I was trading with, my coach, it was all about learning like the strategy to get the entry and exit points. So it's really, really cool. On top of that, Rod, when did I start testing you out? A couple months ago when I started coming into your chat room and your webinars?
Yes.
And the guidance and education Rod gives you is so much like Alan. It's straightforward. It's no BS. That you look at the market the way you look at the market. And he's also always there to help you out, that's what Markify is all about. I wouldn't bring somebody to the platform if I didn't believe that. You get access to the private chat room, so you're actually with the community trading as well. So it's not just Rod. You get to interact with other traders. And then the alerts are actually delivered to you when they make trades via email and your text message, SMS, in real time, okay? I'll drop the link one more time because people keep asking for it. So, but that, like I said, we're not going to keep this open. If you wake up Monday and haven't signed up yet, you're going to be SOL on it. So, all right, Rod, I told you I'm not going to go over tickers, but people are yelling at me in the chat. Can you pull up a couple more? We're going to look at FITX next. And Rod, will you go over volume too? That's a question that I have, especially with penny stocks. And I don't see it in the marijuana stocks, but volume is wicked important too. You could see a price move, but if it doesn't have volume, it doesn't matter, right?
Not all, yeah. Generally, that's exactly the way you want to think. There's a lot of noise, and volume is a good arbiter between what's actual relevant and what's noise. And with FedEx, I mean, I'm actually just going to scroll this back. When we get rid of this newer stuff, you can see there was this pattern was just amazing to me. This is where I was first asked to look at. I mean, go back to Seeking Alpha. I'll go look at the date of that post when somebody actually asked me about it. This downtrend is so controlled. It's so consistent. This is a homogeneity among the participants in this back here when it's just 2 cents on a pullback, so controlled. Here's the high close. Here's the low. Where was my low? Right in here, 61.8%. I just didn't have there's room for noise around that held. I wasn't going to be nervous on this until, and I wasn't trading it. I don't mean to imply that, but I wasn't going to be nervous about my call on this pullback recovering without 1.7 cents being broken. So it held the range of noise. Look at the breakout. It doesn't occur from some arbitrary area, but right at the inflection point. So anyway, that's not what you're asking about. So let me get rid of some of this stuff here. So right now, with this having been inflated, here's a 3-day breakout. Can you see that? That high holds for quite a while. Here's another part of the pattern, and I'm going to show you this actually in MCIG in a moment. But if you see these 2 days that basically go nowhere and are basically contained within each other, that's another good indication that that fun is probably ended for a while. But now, having pulled back, here's a bar. A lot of this stuff, by the way, you can use in stocks and markets and commodities. This happens to be a daily bar. There's a downtrend, and in a downtrend, obviously there's pessimism, extended pessimism. This is day to day to day. Everybody's so pessimistic that on this day, where is that? March 4th, so a couple Tuesdays ago, everybody comes in and they gap it down. They're so pessimistic. It trends down. Maybe Alan knows offhand if there was some news that day. I suspect there would have been. But I remember it was pulling back. I actually had a target down here at 4. And it was met. This is something you'll see on the chart. I'll have identified that. Personally, I didn't buy it. I thought it would sit around down here instead of reacting up so quickly. Some of this stuff is going to be your decision. I say that half jokingly. It's all your decision. I'll identify the price level. But not all tactics work in every situation. I will say that 4 cents was the pullback objective. The reaction up, though, now, I'm a little concerned about. Because it didn't sit around, because it didn't base, technical term, because it didn't consolidate down here before retracing so much, guess what's happened now? This bounce versus this decline, if we take the high to the low close, 61.8%, natural resistance. I'm a little concerned that there's some bigger consolidation, or it's going to be a longer wait. Maybe the analysis is spot on that this is going to be some much higher price stock eventually, but that's some supply there. That's some perception that has to be worked through. So I'm not chasing it. If it were to close above 950, yeah, then possibly that 61.8% retracement will have been worked through by then. We'll look at what else is going on and determine or try to determine whether there's other dominoes falling that lead to a specific outcome, or whether there's other factors that make it attractive. Right now, I don't want to own it under 950. I'd rather see a retest of 4, basically.
All right, guys. As much as I do want to keep going all night, we're going to get to 2 more questions. We still have like over 100. So here's my suggestion. Take the deal. Get in on trading with Rod on Monday, because you guys can go over this with him every single day, which is wicked cool. All right, Rod, I have one question about your software and then one more ticker to go over. What software do you use? And then can you go over NVLX? And that comes from Karen S.
Charting software, what you're looking at here is QCharts. There's different packages. I've got 3 different packages that I use. QCharts I like to use when I'm running patterns, just because their Fibonacci tool, primarily because their Fibonacci tool is just very easy to handle. And then, I'm sorry, I missed the symbol?
NVLX. Nancy, Veronica, Louis, the xylophone.
Oh, sure. Right. And interesting. Also, a little concerned about where we are in this pattern, in that this bar is called a pivot reversal. I started to point out in FIDX, this is a key reversal where we're in a downtrend. Everybody's pessimistic. They're so pessimistic in here, they produce a gap down that extends down and yet closes back above the prior low close. That's not a that's a pretty solid bottom. When that's retested, if it's ever retested, I'm going to be interested in considering buying that. A variant of that is this pivot reversal, where instead of in a downtrend, we're in an uptrend. It works both ways, long and short. We're in an uptrend, and everybody's really optimistic, but all of a sudden there's a gap down. You see that tick right there? That little notch? That says that's the open. Everybody's so optimistic, and yet there's an opening gap down. Well, that doesn't last long as price extends higher intraday, and yet whoever was forcing the open to gap down had it right, it turns out, because we close down. That's called a pivot reversal, not gapping. The only way it'd be a key reversal is if we gapped up and did all that and closed lower. As a pivot reversal, that's a little more substantial. That's going to be really difficult to get through. Get through it, by the way, and that would be a very strong sign. That's how substantial the resistance is. Close above that, especially on volume that's more substantial than the volume that was associated on that day, and that's a very strong sign, very strong buy signal. Meanwhile, it's very strong resistance.
All right, folks, there will be a recording available. We'll send out hopefully tomorrow, if not Monday. Again, though, try it out. It's a 30-day money-back guarantee. It's $19.50 for the first month. Go check out the chat room and what Rod's going to be doing with technical analysis on these stocks, as well as just general education if you're just getting started in the market. And Alan did a survey today in the 420 community, 420investor.com, and there was so many newbies in there. And that's good. That's awesome. And Rod's here to help teach you guys how to buy and sell stocks, how to look at risk, how to look at the charts, how to become a better market participant, okay? It's $39 a month after the first month. But again, you up to the first 30 days, we will give you your money back if it's not what you want, okay? So there's no risk to you. Rod, what kind of analysis can you do on that? There's no risk. Maybe time.
Yeah, well, just the disclaimer. I think we're talking about the subscription cost.
Yes, that's right.
That's it.
Well, Rod, thanks for spending an extra 45 minutes with us. You can see how committed this community is to learning and making money in the markets. And I'm so excited to start with you on Monday, man.
I am too, and thanks so much for this opportunity. Everybody, it was great meeting you.
All right, folks, have a great day. We'll be sending out the recording tomorrow or Monday, so keep an eye out in your email for that, okay? Alan, thanks for joining and being here with us, and everybody have a great weekend.
All right, bye, guys.
Take care.